We have focused on how to calculate gross earnings and deductions from gross earnings to get to our net pay. We now will focus on how do we record all of our payroll information. We have a new form, a form known as a payroll register that's going to be used to record and keep track of a company's payroll information. In the payroll register, we first begin by putting in the employee's information, such as their name, the number of allowances they're claiming, and their marital status. This column shows cumulative earnings. This shows total earnings year to date. Well, this is the first week of the new year. Therefore, this column is going to be blank for this example. As we continue in the 2019 tax year, we will show how much each employee has earned year to date. Next, we're showing the hours worked by each of our 5 employees. Notice that George worked 45 hours, therefore he will have both regular earnings as well as overtime earnings. And this is showing each employee's rate of pay. Now look at Cynthia. This stands 480. So is Cynthia really earning 480 per hour? I don't think so. So Cynthia is on what we call salary. She will be paid a set amount per pay period. So her compensation is not based upon hours worked. She's going to earn this set amount of 480 regardless of how many hours she worked within the given pay period. All right? So the payroll register gets prepared for each separate pay period to keep track and record all of a company's payroll information. So we've gone through all the information. Next, we get to what's called the taxable wages. Taxable wages says what portion of their current gross amount we taxed before, Social Security taxes, Medicare taxes, and FUTA stands for federal unemployment taxes. We're not going to worry too much about unemployment taxes right now because unemployment taxes are paid by the employer. They're not paid by the employee. So we're going to cover unemployment taxes in more detail when we get to chapter 11. All right? So for each of these employees, again, this is their first pay period of the year. Therefore, when it comes to Social Security tax, no one is even near the maximum earned base of $122,700. Therefore, their gross pay is taxable for Social Security tax and for Medicare tax. To get our deductions, multiply the taxable wages times the applicable tax rate. For Social Security tax, that tax rate is 6.2%, which is 0.062 as a decimal. So you would take 400 times 0.062 to get them out with half of the Social Security tax. The Medicare tax rate is 1.45% or 0.0145 as a decimal. So multiply 400 times 0.0145 to get the amount withheld for Medicare tax. You take those same calculations for each of your employees in order to calculate the deduction for Social Security taxes and the deduction for Medicare tax. Now, the income tax deduction will be based upon those 4 factors: how often they're paid, how much they earn, their marital status, and number of withholding allowances. We will use those wage bracket tables found in Publication 15, Circle E, to determine the amount each employee would have withheld for their federal income taxes. Health insurance will be an example of what's known as a voluntary deduction. This that will be given to you for each problem. If they're paying health insurance, life insurance, money going to their retirement account, that will be given to you for each problem in the textbook. Okay. So you're going to deduct all those deductions from your gross pay to get the employee's net amount, which is also known as your take-home pay. This is showing the check number used to pay each of our employees. Even if it's an electronic check or direct deposit, from an accounting audit trail standpoint, typically we still look at either a check number or some type of reference number from the electronic deposit to put into the payroll register. Now, this last section says distribution. This shows the actual department or division, if you will, that each of our employees work for. For example, Cynthia, she works in the office and she is paid a set amount per pay period, meaning she's earning salaries. Hence, the head and office salary. The other 4 employees work in the shipping department and they're all paid an hourly rate of pay, meaning they're earning wages, and you have shipping wages. This section is showing the gross amount that was earned by the employees for this pay period, because the gross amount earned by the employees are recorded as an expense by the employer at the end of each pay period. So the pay period ends on 1/6/2019. We're going to pay the employees on 1/8 of 2019, which means on 1/6, I'm going to make a journal entry to record all of my payroll information. Okay. So the first journal entry we're going to take a look at will be the journal entry to show the actual payment to the employees. The payroll expense journal entry, we're going to hold off on that particular one because in essence, well, let me rephrase that. Payroll expense is showing the expense for the gross amount that was earned by the actual employees. So we'll do that first on the 6th of January. Then on 1/8, we're going to show the journal entries, record the actual payment made to our employees. Okay. So here we have our journal entry to record our payroll information, and the information we're going to use is coming from the payroll register. So the gross amount earned by the office employees and those working shipping is recorded as an expense by the employer. So we have office salary expense for the $480. That was the amount earned by, I believe her name was Gloria. And then we have shipping wage expense that shows the gross amount earned by the first 4 of those employees. So again, the gross amount earned each pay period by the employees is recorded as an expense by the employer. Next, we have the deductions withheld from the employee's earnings for Social Security tax, for Medicare tax, for income taxes, and also for the health insurance payment. These deductions are recorded as a liability by your employer. That's because although these amount of funds have been withheld from your gross pay, they have not been paid to the appropriate tax authorities or to the insurance company just yet. Therefore, the employer owes these funds to the federal government and to the insurance company. That's why they're shown as a payable account, which means we have a liability. So we got Social Security tax payable, we have the Medicare tax payable, we have the employee income tax payable. This shows the income taxes withheld from the employee's earnings. We'll learn in our next chapter that the employer also has to pay income tax. So we distinguish those taxes withheld from the employee's earning to those taxes that are paid by the employer. So these are the deductions withheld from the employee's gross amount. This shows the net amount that's owed to the employees. Now keep in mind our paper ended on 1/6. They should say the 6th, not the 8th. So we have not paid our employees just yet. So we have another liability account called salaries and wages payable. This account shows the net amount that is owed to our employees. Okay? So again, the gross amount earned by the employees is recorded as an expense by the employer. The deductions withheld from the employee's earnings are recorded as payables, meaning they're a liability. Because once again, these amounts have not yet been paid to the appropriate tax authorities nor to the insurance company. The net amount owed to the employees goes to an account called salaries and wages payable, and that's because as of the 6th of January, we have not paid our employees just yet. And that's coming, right? Pay period ends this Friday, you'll get paid next Wednesday. Or pay period may end on Monday, you'll get paid Friday of that week. So it's very common that you're not paid at the exact day the pay period actually ends. Now, when I pay my employees on the 8th of January, excuse me, how are we going to record that particular business transaction? I'm glad you asked that question. And it appears that I did not show it on my slideshow. Oops, but I can tell you. So when I paid the employees on the 8th of January, I missed that transaction. You're going to debit salaries and wages payable, which is your liability account, and you're going to credit your cash account. Once again, when you pay the employees on the 8th of January, you're going to debit the liability account, salaries and wages payable, for the $1,840.57, and you're going to credit your cash account. Now, because I've paid my employees, I can decrease this liability account, and I'll also decrease my cash account. And I do apologize for not having that entry. I had it, I must have deleted it somehow. Last part of this chapter is that we have to maintain records for each of our employees. That's a requirement to maintain payroll records for each of your employees, showing their name, address, date of birth, how many hours they work, how much money they made, total earned year to date, deduction from those employees' gross pay amount. So we have what's known as an individual earnings record. This is just a record that shows payroll information for each of our individual employees. So here we have a sample. Here you see the earnings record for Alicia. It has all of her personal data, social security number, date of birth, hourly rate of pay, etc. It is showing the hours she worked each pay period, earnings per pay period, cumulative earnings year to date, deductions. You have an individual earnings record maintained for each of your employees. Okay? This will conclude our Chapter 10 discussion on payroll computations, and payroll records.